All right, so welcome everyone to the August Lunch and Learn. I'm Chris Lipper, and I own On the Bus Sales Training, Coaching, and Consulting, where we have a community for people that sell, not just salespeople, but people that sell. And our community features monthly meetings of all different types. We have a video library, so if you happen to miss a monthly meeting, you can go to the video library and see it at a later date. We do offer events like social media, where we get together in a room like this and support each other on social media. So if you're not getting the traction you want, let's say on LinkedIn, you can say, hey guys, can you help spread the word with my LinkedIn post? And we'll do that for each other in our community. We have trade shows, so we don't just talk about things, we actually do them. We were having up to 2 trade shows a year. We have them scheduled this year for May and November. We're not doing that. Instead, we've changed some of our classes to be very focused on how to get more out of events like this, virtual events versus in person. And we do have a sales training class coming up on that on Tuesday on how to get more out of Zoom. And there are a lot of advantages to Zoom meetings, one being that chat box. All of you should probably put your information in the chat box now so that we can see it, share it, and reach out to each other. So put your websites and phone numbers and stuff like that in the chat area. We do have a Lunch and Learn coming up in September featuring Lisa Orizzetti with Heart on September 11th. I'm going with the second Friday of the month because of the holiday, and that will be on CPR training. So if you know someone who could benefit from a group like ours, please invite them. Don't get left behind. Get on the bus. And I'm excited about this month's Lunch and Learn featuring Jen Peel from M&T Bank. And we have a nice relationship with both Jen and M&T Bank, and she has gone above and beyond for many of our members, and I get raving reviews. And I can tell you, even during COVID, that there was something that I needed to sign, and we sent the thing down the tube, the drive-through tube for me to sign, and it went back up, and it was just going the extra mile, And so she has also had tremendous success with these PPP loans. I think adding 100% or something crazy. I'm sure she's going to tell you, but I can tell you that many of our members have gone through other banks and not had the success. And then I refer them to Jen, and they wish they had been a client of hers and become one. So I'm excited to hear what she has to say. And if you're not, I'm going to give you a plug, Jen. So tell me if I get this wrong. So if you are not a member of M&T Bank, if you shift your your checking account to M&T Bank, Jen, nod me off if I get this wrong, and your employees that use direct deposit through your checking account, they will all get a $300 bonus from you to M&T.
That's close. That's pretty close. Pretty close. So yeah, the program is called At Work. So as a business owner, what you can offer to your employees is a benefit that you would pass on as the employer. The employee gets the benefit, but you're it's a win-win for everybody. When your employee opens a checking account with M&T and have their direct deposit put in, they get a $300 cash bonus from us. And there's also some other perks and features, but one of the other greatest ones is that their debit card that they'll get with their account, they'll be able to use at any ATM anywhere in the country without a charge. So if you go use it, you're on vacation and you're in California and there's no M&Ts and you go to use it at, whatever bank and they charge you a fee, M&T is going to refund that fee and M&T will not charge you a fee. So there's no ATM fees, which is a kind of a cool benefit. And the cash bonus, and then you start your relationship with us. There's other discounts on loans and mortgages and things, and we will be sure to take care of you. So
as if working with Jen and M&T isn't enough, there's that too. So with all of that said, Jen, take it away. You've got the Lunch and Learn floor.
All right, and just so you know, Chris, that's where Christine comes in. She's a very important part of those programs. So she does a lot of help to me and support for me in these community service events, like the AtWorks and like the thing we did with the Parsippany Chamber back in early March. So thank you, Christine, for being here, and thank you for everyone for being here. So Chris, are you going to make me co-host, or did you already, so I can share my screen in a second?
I will do that now. Thank you.
Okay. All right. So while Chris is doing that, I just wanted to kind of go over a couple of basic things before we kind of get into the nitty gritty. I spent, as part of the M&T team, the better part of April working on just PPP loans for the most part. We got such an influx of applications and we only did them for existing customers. We weren't able to take them from non-customers, but M&T decided to bring in about 2,000 employees to just focus on the PPP. So I was one of the 2,000, and they really ramped up the effort. And because of that, M&T was able to secure SBA approval for the PPP for 100% of the applications that we received that were eligible. So that's a pretty impressive number. And that translates to, if you're just wondering, dollars and people and businesses, it's almost 33,000 businesses. We dispersed nearly $7 billion in the PPP lending. Those businesses employed over 718,000 people. So that's how many people we, just as M&T, were able to touch. And in New Jersey, where we're still a new market, we helped 789 companies that employed over 23,000 people. So right kind of in our backyard, that's how many people we were able to help. So let me get into sharing my screen here. All right, can you guys see my screen? Okay. All right, so just a little background on the PPP and kind of where it came from and how M&T kind of fit into that. So it's a program, I'm sure you guys are all familiar with the basics, through the SBA. So the SBA is a government entity. It was started in 1953, and the main purpose was to just help small businesses. So this lending is from the SBA. But the way that it was set up, you would apply through a financial institution to get the lending. So there were different types of loans that were kind of put out in the CARES Act. So the PPP was the one that's the Paycheck Protection Program. So the purpose of it was to help your business survive by being able to pay your employees. So does that make sense to everybody, and everybody's kind of familiar with that so far? Okay. So one thing to keep in mind, so now we're past the point where you can apply for the loan, and anybody who has the loan, now you can start to apply or think about getting it forgiven, because it's one of the best things about it is that the loan can be forgiven 100% if you do the right things. So we're going to talk about what those right things are, but the information is changing. So right now, a lot of the information in this presentation is general information. There's a few things that are specific to M&T, but chances are if it's specific to M&T, it's going to be specific to whatever financial institution that you've worked with. So it's mostly general information, but there could be some certain things that are specific to us. But one thing to keep in mind, so the application for M&T isn't out yet. It was supposed to be out in the middle of July, and then they pushed it back, and then the most recent date they said was supposed to be this past Monday, but it's still not out because the information from the SBA is still changing. I'm sorry, this is going up. So where do you apply for loan forgiveness? So if you have gotten the PPP loan, Couple things to keep in mind, and the application tips that it lists down on the left-hand side. You want to make sure you have all your documentation together. There's some very specific information that they're going to ask and you're going to need to provide if you want to get the loan forgiven. You're going to have a PPP loan number from the SBA, and then your financial institution is probably going to give you a PPP loan number as well. So you're going to need both of those numbers. You may want to consult with your payroll provider. They can help you provide the right documentation that you're going to need, because remember, the PPP is based on the payroll. So that's the thing that could be forgiven. And then that last bullet, the loan forgiveness applicant should be the same person who applied for the PPP loan. So if you had an accountant apply, or your bookkeeper apply, or it was your partner applied, make sure that's the same person that's applying for the forgiveness. And the note at the bottom is really important. You have to apply for your forgiveness with whatever institution that generated your loan. So if you went to a third party like Kabbage or PayPal, that's where you would go for the forgiveness piece. So, and then on the right-hand side, it just talks about the M&T, kind of the M&T process. So if you did the online application for the loan, then you'll get the information directly from us. And all right. So back in the beginning of June, the government signed the PPP Flexibility Act, because the original information that they had given, they realized, they thought COVID was going to be a kind of a quick thing and we'd be in it and then out of it. So, they were assuming that in 8 weeks we'd kind of get back to normal, but obviously that's not the case. So they decided to kind of put their heads together and go back to the drawing board and kind of reevaluate and reassess how the forgiveness piece would be kind of considered. So if you had gotten your loan before June 5th, you have the option to do the original 8-week scenario, or you can push it to 24 weeks. So this allowed business owners, what was happening is, in order for this to be forgiven, they had to spend the money in 8 weeks. And in order to spend the money, they had to spend it on their payroll. But there were some businesses that weren't able to hire their people back, or there was an industry that, they weren't working yet. So it would have been impossible for them to do that. So they made adjustments on it. Sorry that keeps happening. I'm not touching anything. So now that it's a 24-week, they have the option of a 24-week kind of scenario instead. So that gives you more options, and that's something that most people will probably take advantage of, the 24-week, but that's something to talk over with your accountant or whoever helped you set up the loan to determine what's the best for you. The other thing, so initially they wanted you to be spending 75% of whatever you got, the amount that you got, on payroll. But again, because of not being able to bring your people back, it could have been possibly not even feasible. So they've shifted that. So it's now a 60-40. So 60% still has to be spent on payroll, but 40% could be on other costs and other overhead costs. So this also allows the borrowers to delay your payroll tax payments through the end of 2020, which is also a good thing, because if you're not paying your payroll, then how can you pay your taxes? So that this flexibility piece also took that into consideration. I feel like as they were kind of putting this together, more and more things kind of came up because the scenarios started to change and things just started to change. So just like businesses had to pivot, like they're pivoting, in this as well. Then they also, one of the caveats in the beginning is you had to hire back all your people. And now this is another thing that now you don't necessarily have to have them hired back, but you have to kind of prove that you tried to hire them back. And as long as you end up with showing in good faith that you tried to get back to that same FTE, you're in good shape. And then finally, so payroll costs were capped at $100,000 for every employee. So if you had an employee that made $120,000, you're only eligible to apply up to $100,000 for their payroll benefit. But now the way you spend that could be different because of the 8 weeks versus the 24 weeks. So again, a lot of this is kind of getting into the weeds, and I don't want to do that because I don't want it to be complicated. The point is to just definitely work with like your accountant, your tax person, whoever does your financials, to make sure they're helping you with the best scenario that works for you. All right, so as far as the application itself, so the SBA did put together an application. The way M&T is going to process the application is similar to how we took the initial applications. So we ask all the questions and kind of capture all the information on our form, and then it populates the SBA form. And I'm assuming that that's how most financial institutions will do. But you can go on the SBA website and look at the form and know what information you're going to need. So doing all this kind of homework ahead of time will help you, because the application process, from what I hear, is going to be a little bit time consuming. It could take 20 to 30 minutes to input it all, and that's if you have all the information gathered. So the more homework you do ahead of time, the easier the process is going to be. So I would recommend going on the SBA website, just taking a look at the form and kind of looking at the information that they're asking for, making sure that the same person who applied for the loan is going to be the one applying for the forgiveness, and then start to gather all of the documentations that you're going to need, which is all your payroll statements, and if you're self-employed, you're going to need bank statements or copies of checks. Like, those are the things that you're going to need to be aware of. And that green box under things you should know on my screen is cut off a little bit because that's where we are, like the little talking heads are on that side. But one of the things, like, these are important things to remember. So I'd recommend doing the calculations and all the forms ahead of time so you know what the numbers are going to be that you're going to need to enter. Then that second bullet is really important. Borrowers will need to retain information for 6 years. So that 6 years part might be cut off, but that's really important. So when you submit for the forgiveness, hold on to all your documents, everything that you submitted, the application, hold on to it for 6 years, because they could come back and ask for it at any time within that 6-year time frame. And then also, you're going to need to provide additional information on your employees so that you didn't need to apply or provide with the initial application, including their names, their social security numbers, and then the breakout of what their annual income is. All right, so how does the forgiveness work? So initially this was the 75-25, and now they've shifted it to 60-40. So 60% needs to be used towards payroll, and that can also include health benefits. If you contribute to a 401k, things like that all fall under payroll. And so it's at least 60%. So it could be 100%, but it has to be at least 60%. And remember, this is what you need to do to get the loan forgiven. So if you follow all these parameters, then you don't have to pay back this loan. So the other 40% can be used for other, like, overhead expenses. So your business mortgage interest. So if you own, if you have a mortgage on the business or a building, then the interest on that. If you pay rent for your space, any utilities payments, all of that can fall under this additional 40%. But 40% is the max, because the rest has to be payroll. And keep in mind that note at the very bottom on the right, that your mortgage loans, rent and lease agreements, and utilities had to be in effect before February 15th, because that was the date. February 15th is when your business had to be in business in order to apply for the PPP. Does that make sense to everybody?
What if you change
Like-
locations in early March? So you're already in business, but you had a change of some type before.
You were in business February 15th, but you had a change in March?
So you could have been in business 20 years, but you moved your office March 1st.
That's okay. That's fine. If you just moved, it's okay. If you closed your business, then, you know, that could be tricky. But what they don't, like if you started your business March 1st, then you're not eligible for this because you didn't have employees, like you didn't have any, yeah.
They didn't want you to start a business just to get this. I got it.
Right, right. Or if you did start a business, you're really not eligible because it's supposed to support payroll. And if you didn't have a payroll before,
Got it.
you know, yeah. So that's a good question though. Is everybody else following so far?
How do you want questions handled? Should we just blurt out and ask, or?
Yeah, you can. Yeah, that works. Okay. So some important considerations regarding the forgiveness. So this is a little bit of a busy slide. So the covered period is either the 8 weeks or the 24 weeks. So if you applied for the loan before June 5th, you could still use the 8 weeks, but most people are probably going to stretch it for the 24 weeks because that just gives them a longer time to spend the money. They're not under the gun to spend it in that 8 weeks. And just so you know that the clock starts ticking the day that the money got deposited into your account. So that's when your either 8 weeks or 24 weeks starts and you need to spend it, you know, using these 60-40 rule in order to get the forgiveness in place. Make sense? Mm-hmm. All right. And then the bottom left, that exemption based on employee availability, I spoke a little bit about this before about the FTE. So if you're not able to rehire the people that you had on your payroll, you know, as of February 15th, or qualified people, you can apply for an exemption. So there is sort of some leeway in this where originally it wasn't. And then the other scenario is if you weren't able to, you know, because of the industry or whatever, if you're not able to return to the same level of business activity, you can also apply for an exemption. So these are all things definitely to work through with your accountant. Melissa, it looks like you have a question. What's the matter?
No, I was assessing how these scenarios work for us. So we were not able to bring everyone back.
Right.
So I'm trying to play this out in my head. How does this?
Okay.
So like essentially we're exempt.
Yeah, you'd have to ask for the exemption and then you'd still be able to get it forgiven. So regardless, like if you guys got the money, you got the money. Like what this is, we're going to try to work on getting it forgiven so you don't have to pay it back. So these are kind of the
so
things that are
that's if they reject our loan forgiveness, we can basically appeal it with those two scenarios.
I think this payroll and expenses that will cover you. I think
we might be okay. I was trying to learn through this scenario.
Yeah, no, that's okay. That's all right. Well, and the fact that they lowered it from 75% to 60% that you have to spend on payroll does help the business owner because it's not, you know, if you could only hire back, you know, 75% or maybe 50%, you only have to hit 60% of what your loan was towards the payroll now instead of 75. So it gives you a little more flexibility in there. And then you have until at least December 31st to try to get back to that original number. So, and then the bottom right, the FTE reduction exemptions. So, and this is kind of what we're talking. So you make a good faith written offer, you know, to the employee and they, you know, they reject it, then keep the records, keep the email or the letter or whatever, so you have the documentation, and then you go ahead and submit that with your application or with, and hold on to these documents for 6 years. So it's a little bit more work, but it's worth it probably to get it to be forgiven. This is where it kind of does get into the weeds, where it's good to kind of have an idea, because in some people's scenarios, this is going to be the reality, because you didn't, like, especially as a restaurant, you may not have been able to get everybody back because you can't open, for inside dining. So, you just don't have the same, it just doesn't look the same.
Yeah, that's our situation. We can't bring
Yeah.
anybody back.
So
Bartenders,
right. So you do have some sort of leeway in this, which is good. So it's good to know it, but I would definitely work with your accountant on the details of it and what you need to do and how you need to track. Like, if you offered employment to everybody to come back, make sure, you have it in writing that they don't want to come back in writing, keep all that, and that's going to help your case with the exemption. All right, so then this just talks about what documentation is going to be needed. I kind of talked about this a little bit before. So your bank account statements, your payroll statements, your tax forms, any receipts. So if you're self-employed, you might have canceled checks that you wrote yourself for payroll. And then there's that FTE documentation. So any employee job offers and refusals, if they happen to get fired or if they resigned, like, make sure all of this stuff is in writing and you can capture it and prove that this is why your FTE isn't what it could have been or was. And then as far as the non-payroll expenses, your bank statements, your mortgage statements, copies of checks that you paid your lease, utility invoices, receipts. It's all pretty standard and pretty much what you'd want. But again, you want to have these things. I know our application is going to be online, so don't have just copies of it, but you're going to want like a PDF copy or have it, handy all in a folder and on your computer so you can, upload everything. So, okay. So another thing that is actually, I think it's kind of cool and it maybe can help take the pressure off. So if the loan it's not a all or nothing thing. So if you have, got a certain amount for your loan and maybe, for whatever reason, you were only able to use 50% towards payroll. So you didn't meet the exact parameters for the full forgiveness, you'll still get partial forgiveness. So you don't owe, you'll only owe back what you couldn't prove to be forgiven. Does that make sense? Okay. And the terms are pretty good. The percent is pretty low. It's a shorter, loan term. But hopefully the goal will be to kind of get everybody to get all or just about all forgiven. So if you do turn it into a loan, on the bottom left there are no prepayment penalties, which is kind of cool. Sometimes with loans, if you pay it early, then you get a penalty because the banks don't want you to pay it early. That's how, they make their money. We make our money on the interest. So if you pay it back early, we're not earning the interest that we thought. So, but that's not the case for this. You can pay it back early and there's no penalty. Your monthly principal and interest payments will be recalculated once your forgiveness has been determined. So, if they determine that you're only going to be able to have 90% forgiven, they'll calculate what the remaining, piece would be. And then it'd ultimately be up to the SBA if they deemed you ineligible for the loan forgiveness. But hopefully with all this information and just kind of tracking the, documentation and the information and keeping good records, you'll at least get, most of it forgiven. So, and then the green box above is just about the timing of when to, apply. So I mentioned before, the application for the forgiveness is still not even available for M&T, but the information as to what you would need is available on the SBA website. You're going to apply for the forgiveness with whatever institution that you applied for the loan. So it's not through the SBA. It'll be through whatever bank or whatever online service that you use. That's where you'll go back for the forgiveness piece. And the other important thing is hang on to all your documents for 6 years. And then this is more of like an M&T thing. But that website up there, the mtb.com/business-informed, feel free to write that down. It does pertain to M&T, but it is, a lot of it is, like I said, just general information that would apply no matter what. So feel free to, check that out and look at, our process, because chances are it would follow whatever, whatever bank or financial institution that you used. So then finally, this is very important. First sentence, this content it's for informational purposes only and is subject to change, which is why the application isn't out yet, because there are these little nuances and things that have come up that they're tweaking and changing and hopefully making it better so that there's not homework to do on the other side of this. Once we put it out there, it'll be ready to go. So do you guys have any questions?
I have a goofy question of sorts. So you're saying that on the 60-40, which was 70-30 split, that so if you're self-employed, right? So you pay yourself, and then there's a percentage of it needs to be used towards business. So we had just moved into a new office. What if it's things like artwork for the office or things that hang on the wall? Is that going to fly or no?
I don't think so. No, because that's not a true overhead expense. Like, you don't need that to run your business, so.
Well, it could be a graphic chart. It could be a teaching tool. So let's say for Lisa, it could be some kind of chart that shows beats per minute or something.
I think it has to kind of stick with, it has to be like true overhead costs. Like utilities, you're, keeping your internet on, your lights on, your lease, your actual space, but any like supporting, I don't think that would qualify. Cause like even equipment and stuff isn't really on here. So
again,
that's okay, Chris. I don't have a loan. I'm just listening to support all of you guys.
I knew the answer. Yeah, I know. I figured it out. Any other questions before we move on with the conversation?
Jen, from the time you receive your loan, the PPP was deposited to the bank. How many days is that? Till you had to be used by how many days?
So you could either do the 8-week scenario or the 24-week scenario. So for most people, the 24-week scenario would be the one that you would want to. Yeah.
Okay, Jen, you also had some other topics we had discussed along the lines of loan evaluations and things like that. Do you want to go into that a little bit?
Like for future discussions? Yeah, so what, let me also share this one thing. I wanted to also just share this. If you guys, to get my contact information, you can just use your phone and take a picture and scan this, and it'll bring up, it'll add me as a contact in your phone, and it'll have the branch phone number. So, yeah, so sort of like kicking off like this with the PPP, since it was such kind of a hot topic. I thought maybe like a future series of financial literacy for business owners, some important things that sort of in the whole process of this, like say you got your PPP loan and, you're kind of struggling and getting through your business and you realize that you maybe need some future business lending. I thought maybe kind of a series on the business lending would be helpful. And kind of the very first thing that you'd want to think about when you're a business owner and you might look for, a loan, you have to have good credit. So the business has to have, certain kind of, you want to have it be established. You want to have it have some cash flow. You want to have it around for a couple of years. You want to be experts in your industry. But ultimately, it comes down to the fact that if the business owner doesn't have good credit, in this day and age with everything going on, that is so important. So I thought I would talk maybe next time on how credit scores kind of work and how they're reported and what you can do to improve yours, so you could kind of get off to a good start. So if you wanted to do that lending, and then maybe a future one, we could talk about, exactly what you would need as a business owner if you were looking for lending and what that looks like. Or if you're, a business where you might have, other businesses that you work with, what they would need if they would need lending in order to do business with you. So I feel like it can be complicated, but there's also some simple things that you can do. So if that's interesting or helpful, I just kind of, in my experience, what I've seen with people who want to, kind of grow their business or change their business or maybe start a new business, these would be important things for them to know ahead of time and kind of how to navigate and set themselves up for like a good experience down the road. So that was my thought for some future financial educational workshops.
I like it. So I just wrote down our next workshop with you is going to be October 2nd. So
Okay.
I just want to jot that down. Do you want to talk a little bit more about what you're looking for in loans other than good credit? We've got 15 minutes.
Well, so kind of like what happened with, I think probably a lot of banks, definitely M&T, we kind of actually put a hold on all lending through the whole PPP just because everything was just so up in the air. Lending sort of took a back seat, and then, the PPP and all the SBA lending sort of took a forefront. Now that it's not really settling down, but I think we're able to kind of, I was dispersed to work on the, one of the 2,000 people to work on the PPP loan. Like now I'm not working on that anymore. There's a whole team of people who do that, and the volume that they had at that time isn't what it is anymore. So now we're sort of shifting back to, look at some maybe lending opportunities. However, they're not looking at them the same as they did, back in January and last year. So what we are kind of like hoping for, or asking for, is for companies to start a relationship with us on a deposit account first. So we kind of have a little bit of history. We get to know your business. We can kind of help you figure out what your, maybe short-term goals and long-term goals, and find out if maybe lending is the right solution or not the right solution. But if we start with that deposit account and start with the relationship, then we can kind of build from there and, talk about a lending, have a lending conversation in maybe 6 months. So, we're probably moving a little bit more conservatively than we did in the past, but I think that's probably true for most banks. So that's kind of how we're handling it. And I have done some loans in the past couple months, so it's certainly not a hard no by any stretch. But it's definitely a little more difficult than it used to be. But if you do the right things, like if you have a deposit account and you kind of start the relationship, it definitely helps your case in the underwriting process. And one of the cool things with M&T, like I have one underwriter that I work with. He sits up in Buffalo. His name is Robert. And anytime I put a deal in, like before I put it through, I'll call him and talk it through with him and let him know the deal, and you know, he can let me know if there's any, you know, red flags that he sees or anything that just doesn't sound good, or maybe you want to get more information, or make sure you submit 3 years of tax returns just so we could look at the history. So I kind of have a good sense going in if it's going to get approved or not. So I have that relationship with him. I have that relationship with my customers. So it's a, you know, it's hopefully a better kind of process throughout
So
for everybody.
we had talked a little bit also about the different kinds of collaterals and different offers that the people on this call could make. So I'm thinking like of David Quick, who's in the IT. You know, if one of his clients said, yeah, I'd love to put 20 computers in next month, but I can't afford it. You know, is there a way he can offer financing? And, you know, let's say someone like Nick wants to put up a tent, you know, with heaters and make this whole thing for winter, you know, like a big P.T. Barnum tent, you know, and is that something that could be financed through you guys?
Yeah, I mean, anything is possible. I think, you know, lending it's interesting. I mean, there's a lot of historic kind of data that we look at when we look at a loan, and you mentioned collateral too. So it's interesting because a service industry, like a professional service industry, like an attorney or a CPA, like they don't necessarily have collateral. Like there's not, you know, we don't really want their desks and their chairs. Like that's not, you know, anything of value to us, where maybe like a construction company would have trucks and equipment that, I mean, we're not really in the construction business, so it doesn't really, you know, we like to lend on cash flow, you know, and know that you could pay your loan back. We're not really collateral lenders, but obviously if you have the collateral, like if you own a building or you own your home and you use that as collateral, that decreases our risk and we're more likely to lend.
That's the item that
but
let's say you're a construction company and you need it for a dump truck, but
mm-hmm.
Can the dump truck then become the collateral?
Yep. In that case, the dump truck would definitely be the collateral. Yeah. And those instances are going to just be a stronger deal. So they're more likely to go through, especially in these times. But like, you know, if you're an accountant or you're a lawyer, like you don't really have the collateral, but it's still a strong industry. You know, people don't become lawyers, you know, to just decide they're not going to practice law anymore. You know, you don't go through all that schooling, spend all that money and have the degrees, you know, and you really get into it, and your chances are the industry speaks for itself and is pretty strong. So it goes on that history of the industry. And that's where, you know, we do, like I just did, it's a brand new law firm, but he's been around for a long time. He used to be on his own. He joined another practice. Now he's back on his own. So he's literally kind of starting from scratch, but he's been around for a long time. He's practiced law for 20 years, just not under this exact company because it's brand new. But we were able to do a nice size line of credit for him, and he's, you know, starting his deposit relationship, got a business credit card, and, you know, and he had no collateral. I mean, he was starting out with nothing, you know, but it's a strong industry. You know, he's been around for 20 years and, you know, he's successful and
he had good credit. How do you feel about entrepreneurs in general? I mean, do they fall under those lines? You know, I'm looking at Patty Singer, who's been in business forever, and there's a number of people on this call that have been in business a long time, but we're still entrepreneurs. Where would that stand?
That's why, like, individuals' credit, like the individual owner's credit is so important, because it kind of falls under risk, you know. So like, we'll take Patty, for example. Like, she has, you know, her business has been around for many, many years. So that the longer it's been around, the stronger she's going to be, just because her business has been around for a long time. The better I know Patty, and the more I can say, you know, she's helped this person by this and this person with that. And, you know, this is, you know, like, the more of a story that I could tell, about her and her business and how I know her and how, we were in different networking groups together, and I know she's, been referred, and, the stronger the story, the better. And then if Patty has great credit and she wanted to apply for a loan, it's probably going to be no problem. So, she's got a long time in her business. She's got, a strong business. It's like a niche kind of thing, but it's definitely needed. It's, it's relevant in today's world, especially right now. She's got good credit. The only thing that would maybe help her more is if she had an M&T account, for 6 months. That's just going to make her look even better. So.
Okay. We've got about 5 minutes. Any other questions out there? I can't see all of you, so just blur it out and move my screen around.
Hey, Jen.
Yep.
Hello, from Fitness Knocking here. How are you?
Hey, I'm good.
It's great information. Is there a place that business owners can go and check their business credit?
So business credit is just like, it's kind of an air quotes thing. It's sort of a, it's some sort of algorithm that, so if you checked your business credit with M&T, it's probably going to be different than if you checked it with another financial institution, because kind of the pieces that everybody looks at is a little bit different. But I can tell you at M&T, they're going to look at what your industry is. They're going to look at how many years you've been in business. They're going to look at your personal credit score. All of those will factor in. Those are the biggest three factors in what kind of computes your business score. Then if you have a deposit account with us and we have a little history and can see how you've spent or saved your money, that helps too. That's going to make it a little bit higher. And all of those little things contribute to, whether we would lend to you or not. So the collateral would maybe factor in there. So, but there's certain industries that are stronger than others. Like I said, a lawyer is still a really strong industry in and of itself, even though there's no collateral. But a construction company would also be a really strong industry, maybe not so much for the industry itself, but more for the equipment that they have. So it's not exactly apples to apples, but they could still both be high for different reasons.
Okay, so I'm going to be really specific. So in my industry, right, my goal is to franchise my company at some point.
Okay.
That's cost a fortune, to which saving that kind of money is going to be difficult. Saving some money, of course, is possible. How far out would I need to
project
and at what point should I apply? How far in advance? Does it take for example, I know how long it takes to do a second mortgage, because that's how I started this company in the first place, which is completely paid off, by the way. But how far, and that took 3 months. So what's that business loan? How long does it take to get funded? Is it a couple of months? Could it be
from application to check?
Right.
So assuming everything's in order and everything's good to go, the actual process, it can depend. The larger the loan, the longer it's going to take, because there's going to be more things that they're going to need to, look at. We have I hate to use the word product because I feel like it's so salesy, because it's I feel like that's not how we do things, but for lack of a better word, we have an express loan or line of credit. So if it's under $100,000, they call it an express loan or line. It could be either one. But if it's under that dollar amount, they actually it's really just credit driven. So they'll look at your, how long you've been in business for. So if it's over 2 years and you have a good credit score, they're pretty much guaranteed to decision that loan probably within 48 hours. And then you could probably get lending, another week later. It could be in your account. So, but that's for under $100,000. If you're talking over that, it probably could be like, probably if it's between 100,000 and 250,000, it might be, you know, three to 4 weeks, because there's more stuff that has to be done.
Do you, for the quick loan, so to speak,
Hmm.
what do they look at as far as like, because I know, like, again, in buying a house, like, you have like loan to,
Value.
loan to value, that there's a big
Right.
with that, and then, you know, percentage of down payment when you're buying a home, this is
Hmm.
a loan. So like, what does the company need to have be making in order to
So
get
usually,
a loan?
so it kind of
Approximately.
depends. Yeah, no, that's a good question. And so it kind of depends. So if you're looking for a loan, like if you're looking for a loan because you need it for a specific thing, like if you know you need $300,000 to franchise your you know, your business. If that's what it costs, that's what it costs. We would go back with the underwriting. We'd look at all your financials and we would, you know, decide if that's feasible or not, you know, based on your numbers. So a loan is kind of different because it's always going to be based on what it's for, as opposed to like a line of credit, which you would get for shorter term things. Like if you're looking to franchise, it probably wouldn't be a line of credit that you'd want to do. But a line of credit would be for, I don't know, paying payroll or maybe some short-term purchases that you need to make and then pay off, kind of like a home equity line of credit that you'd have for your house. That's usually based on whatever your annual revenue is. Your line of credit you'd want about 10 to 15% of. So if your annual revenue was $500,000, you'd probably want a line of credit, like an appropriate line of credit for your business would probably be about $50,000, $60,000 maybe.
Jen, I want you to keep an eye on the time because you did
Yeah.
at 1 o'clock. So we'll call it here. I will speak for Jen, letting you know she's very available to anyone who has questions. You can scan her QR code there. And Jen, I want to thank you for doing this. You did a great job.
Yeah, thank you for the opportunity. I hope it was helpful.
It's great.
Thanks, Jen, always.
And
Thanks, Jen.
Thank you.
we'll see you
Thank you.
back in October or any other event that you want to come to. And for the rest of you, our next Lunch and Learn will be on September 11th, the Monday or the Friday after Labor Day, featuring Lisa Orizzetti on some life-saving information. And we do have sales training on Tuesday, getting more out of calls like this. For those of you that popped on here and did not schedule one-to-ones with anyone, thank you all for coming.
Thanks, guys.
Thank you.